Hello, trading has closed on the 19th of March 2025. As always, we'll do our disclaimer, go over our calls, and then make our predictions. It's my trading plan for tomorrow, which is March 20th, 2025. Remember, I can change my plan. My plan can be completely wrong, trade at your own risk. I hope everyone got a chance to hear Rod David's free presentation today. He has one tomorrow as well. Don't miss that. Look for the pattern today with the early high. That's this. Tomorrow has the early low. We had this huge drop yesterday. I said I thought we would trade higher unless we gapped under these lows. Obviously, we didn't gap under the lows, and we did trade higher. Oh, let me show you what we said here. This is just a review of what we said. There was a bullish pattern, higher prices. Okay, back to work. MEJT said this drop was false. We've already retraced. Now it doesn't like this rally. It says we're going to retrace, go to 56.48.80. Now that's quite a ways under where we closed, and futures are up around 20 as I'm recording this, and if we gap up smartly, the price remains on the table, but not at the time. But if we don't gap up smartly tomorrow, that's my call, 56.48.40. Correction, 56.48.80. Well, I always keep track of the FOMC announcement prices. This was 56.38.40. This is one from months and months and months ago, 56.68.34. Look how it was respected at this high. Look how there was resistance right at this high. There are support resistance areas right at these prices, even months after the price prints. Usually after the FOMC announcement, if you're on top of that announcement price, you're going up, and if you're under it, you're going down with a little leeway. That's not exact. If you violate it slightly, it doesn't really count. So we're getting close to this price again. We go under it by more than an insignificant amount. That's kind of negative. Now, there are a few rules I use for the FOMC announcement. First rule is that the first move after the announcement usually tells you the next move of consequence. So the first move is a very brief dip. So if that plays out, we're going to get a drop of consequence. Doesn't mean you won't go up first. In fact, you normally get a three-leg whipsaw. If that's the first leg, and if the second leg topped here, we should go under this price by at least as much, and usually more, than we went over it. So if that high holds, and if the three-leg whipsaw works, it tells us we should see the area at 55.61.47. That's quite a bit lower. Doesn't mean we have to stop here, but this thing in red is a Fibonacci grid, and you set this at 23.6%, and you can see the 50% area is respected, 61.8, 61.8, 78.6, and there's your 100 right there. So that's a completed pattern, and that's Fibonacci resistance. Now, resistance doesn't have to hold, but it's held so far, and after beating this old high, we closed under that high, and even under this low, meaning under this whole consolidation, meaning that's a rejection of this move to a new price. Now, time doesn't run out until tomorrow morning. We gap and take this high out, and just forget it all. This doesn't count because time's not up yet. But as of right now, it's threatening to reject this move up and threatening to take us to 56.48.80 tomorrow, unless we gap up, and eventually to 55.6147, which is a target, not a stop and reverse. Well, here's our count. Let's focus on what's happened since we hit this wave 2. Well, yesterday we had a clear 5 waves up, and we said this was either 2 or A. Well, I'm calling it A because we have an A, B, C, with C equal to A right at the high. A, B, C, clear 5 waves. All these fibs work. And what's interesting is that if we hit the whipsaw target, this would be green C, and if we stop right at the target, green C, and green A, from high to low, we have a good fib relationship. So if we do stop here and start dropping, that's one of the reasonable places where the drop could stop. Just because this target works doesn't mean something else won't. But if the whipsaw plays out, that's what you should get, at a minimum. Well, Thursday's pattern has the early low, regardless of where we open. Typically, it is a bullish day with a high in the final hour, but if it's not bullish, if it's weak, we should see more weakness. There's a lower MEJT target, and unless we gap up smartly, the rules call for it to print. Now, futures are up a lot as I write this, so it's entirely possible we get that gap. But the Nasdaq McClellan oscillator is well over its upper Bollinger Band. That's reversal territory. If it reverses through the band, that's a sell signal. The high of day is a fib target of the consolidation at the low. The wave count's compatible with this leg of the rally having ended. The first move after the FOMC announcement was down. Usually this indicates the direction of the next move of consequence, and if the Fed whipsaw plays out, we should trade around 55.6147. And the failure of the market to close over the prior high after having topped it is negative, unless it's invalidated promptly. So my thoughts are that we've completed the first wave up, we're making an ABC, and after we hit the C, I think that's a good candidate for the end of B, and after we hit the C, it's a good chance that's the end of round 2, and then we're going to have a big rally, and I think the real future for this market's on the upside. But this is not the kind of action I like to see after an FOMC announcement, because it implies we're going to have a steep drop first, and if we do get the steep drop first, I think it'll be a buy, but until that happens, I have lower targets in a pattern with an early low, and that's today's call.